Welcome traders. The focus of today's video analysis is on the dollar bullishness after last Friday's NFP positive results. But first of all, we do have, of course, some messages to make you aware of. For instance, the fact that this is intended for a global audience and it may not be suitable for all viewers. To get the corresponding info on that and charting conditions and other details, visit admiralmarketsglobal.com. Also, please be aware that trading for exchange is considered high risk and it may not be suitable for all traders. Please seek the advice of an independent financial advisor for more information on that. And this video analysis is for educational and informational purposes only. Alright, thank you so much for your attention on those. And now I want to show you the weekly webinar schedule. We have a great lineup once again in front of you. Wednesday, of course, we have, and Thursday we have live educational webinars in the evening. Tonight we have a weekly FX recap with Nenet. And then on Tuesday, Wednesday, Thursday mornings, we discuss strategy and live trading labs. Camarilla and moving average are the topics of the labs, and strategy, of course, is on Wednesday. First thing on the list is the euro dollar. This is the weekly chart. And yet again, we see a massive bearish candle. In fact, look at this. The close of last week very near the low, and I would say this is probably the third very bearish candle in a row, but obviously you see this trend lasting now for about 11 weeks straight almost. So very impressive. And yes, yet again, it could be the same play. It could be again maybe a bearish week to come. We've already had 11 in a row, so there could be a 12th. Of course, at one point or another, this downtrend will pause, at least temporarily, just like we had, for instance, here, a bit of a pause up where I have the cursor. Let me draw that with a green color here. Now, obviously, of course, a zone like that is going to occur at one point, as I said, but where? One of those levels where that could happen is, for instance, now actually 125 is a psychological round number. We, of course, have this trend line coming in as well. Let me zoom out again. You see connecting these two bottoms. Of course, those are levels where price might stall, might pause, and then we'll have to see if it has enough muscle to break through. Probably, yes. In my long-term vision, it should. For the moment, though, that's not of concern. For the moment, the concern is this going to be the bouncing spot or lower at the trend line? And keeping an eye, therefore, of course, on lower time frames like this daily chart where you can see bearish engulfing twins. No clue of such a bounce as yet. Here too, strong downtrend channel on the euro dollar 4-hour chart here. And a continuation of this downtrend still seems the most likely to me, in fact, down to that maybe that trend line I just mentioned. So I would put a fib personally from top to bottom here and see if price can make a correction back to the top of the channel, back to maybe the 50 or the 61.8 fibs, and see if price has some rejection wicks there, maybe some shooting stars or engulfing twins, and there is a good chance, I would say, of a further downtrend continuation at that point in time. This is the pound dollar weekly chart. Here too, a lot of bearishness. This is already week 11, although we had a bit of a bump to the upside. So here too, expecting the dollar to continue its strength, basically. Question here too is, are we back in a full-fledged down cycle, or could this maybe expand into a correction here like this? For the moment though, definitely any retracement up around 163 would find retracement. Actually, the question is, can we even get that high? Because price did break, out of this trend line here and is below this trend line here. So as long as price stays below this resistance line, any movement up should face that resistance and rejection for further downside, similar basically as the euro dollar. The AUDUSD last week had yet again a bearish candle as well. The AUD definitely starting later in its downtrend than the euro and even the pound, but now fully engaged in this downtrend as well. You can see price trying to break through this 86.60 bottom here, dating back to January. So can price push through it? We'll have to see. Of course, it is at a fragile point when it's so close to the bottom, but we already had one attempt here. This could be the second attempt. Maybe the second attempt could be more successful. We already have engulfing twins, but it is a difficult spot because obviously a bottom like that could cause price to give a bit of a bounce a bit of a correction before we see the follow through. So that's the only concerning part of for me from the Aussie point of view. And I would probably keep an eye on a trend line like this, for instance, to see if price can break through that support besides the blue bottom here that I have on the chart. Otherwise, I'll also keep an eye on how price reacts to basically rejection levels and resistance levels when it gets closer to these tops. Obviously, those could still be very good levels to think about or to look for potential reversals back into that bigger downtrend. Last but not least, the dollar yen here too. Same story regarding the dollar. Of course, the uptrend visible, but one difference here again with for instance the pound or euro is the fact that it's really close to a major level, the minus 272 target. First of all, of this bigger swing high, swing low that we of course saw here, very big thrust. We're very close to that target. Plus we have the 110 psychological number, and you're seeing definitely some on this 4-hour chart, some reaction to that here when the dollar yen fell some 200 pips. So is that all of the correction, or will the correction indeed turn out to be a more choppy zone like this? That is definitely what I am thinking of at the moment. I don't expect this uptrend to continue immediately. I think it will eventually. There's, I think, too much power in this up leg here not to see some follow through. But what I'm expecting on the dollar yen is at least some kind of bigger sideways move like that. If not, maybe even some correction like this, for instance, that could bring price back to 107, for instance. So one of the things I'm going to do is put a fib on this move up, for instance, here. And you can see price stopped at the 23.6 fib. And it could go all the way down to the 38.2 at 106.80. However, if price breaks below that, then I'm not as bullish as I am now. If it respects either the 23.6 or the 38.2 fibs, I would remain that bullish outlook. It's just a question of when, and that when could actually take quite a while as price basically makes maybe a bigger consolidation at this 110 resistance spot. Thank you, traders, for your attention. Hope to see you in one of these great webinars in the upcoming week at Admiral Markets, and take a look at Admiral Market spreads and also the social media for continuous and very good updates regarding analysis, technical, fundamental, and wave analysis. Hope to see you very soon. Cheers.